The issue of unclaimed dividends remains a persistent subject in the Nigerian capital market. Welcome to another edition of the Nigerian Investor. Last week, we talked about the Nigerian stock market and stakeholders' expectations ahead of the inauguration of a new government. Today, we want to look at the incidence of unclaimed dividend and what investors need to know. The incidence of unclaimed dividend in the Nigerian capital market remains one of the perennial issues that continue to rear its head, while the apex market regulator, SEC, is yet to come out with a clear-cut plan on how to solve the problem permanently despite the introduction of e-payment system. In its latest circular to all capital market registrars, the Securities and Exchange Commission directed all registrars of public companies to return all unclaimed dividends which have been in their custody for 15 months and above to the paying companies, with evidence of remittance expected to be filed with the Commission not later than June 30, 2015. It will be recalled that similar directive was also given in August 2014 during the tenure of the immediate past Director General, Mr. Maote, with a court injunction filed against the directive by Prussia Nigeria Limited, a leading market analysis and intelligence firm. Kama Act on Unclaimed Dividend. The Company and Salary Matters Act, Kama Act 1990, Part 8 from Sections 379 to 386 dwell extensively on dividends and profit of a company. Section 382 of the Act dwells specifically on unclaimed dividend and what the companies are expected to do with it. It states thus: 1. Where dividends are returned to the company unclaimed, the company shall send a list of the names of the person entitled with the next annual general meetings to the members. After the 3 months of notice mentioned in subsection 1 of this section, the company may invest the unclaimed dividend for its own benefit in an investment outside the company, and no interest shall accrue on the dividend against the company. Where the dividend have been sent to members and there is an omission to send to some members to the fault of the company, the dividend shall earn interest at the current bank rate from 3 months after the date on which they ought to have been posted. For the purpose of liability, the date of posting the dividend warrant shall be deemed to be the date of payment, and proof of whether it been sent is a question of fact. Further down to Section 385 of KAMA, it points out the right of shareholders to sue for dividend, and it reads thus: dividend shall be special debt due to and recoverable by shareholders within 12 years and actionable only when declared. Stakeholders' response and reaction to SEC's directive on unclaimed dividend. In a telephone conversation with the parties involved and stakeholders in the market, a staff of the Securities and Exchange Commission helped throw some light on what necessitated the directive. It was stated that some operators, registrars, do trade with the unclaimed dividend in their possession, and looking at the quantum of the money available as unclaimed, the Commission needs to discourage this act and reduce the amount of unclaimed dividend. Throwing some light on the process with this directive, the staff said shareholders still need to approach registrars for their unclaimed dividends, while the registrar is expected to carry out some verification exercise on the shareholders and reference the issue to the paying company, who is now expected to release the dividend in question to the registrars for onward payment to the shareholder. The processes will be monitored by the Commission with both the registrars and paying company via regular correspondence and update. Speaking on the registrar's side, the President of the Council, Institute of Capital Market Registrars, Mr. Bayo Olugbemi, said we should rather talk about how it affects the shareholders and not registrars. He said SEC is the regulator and registrars will comply, but looking at the issue from the angle of contacting the payment company before shareholders can get paid will only amount to stressing the shareholders. Mr. Oderinde Taiwo, the National Coordinator of Proactive Shareholders Association of Nigeria, a member of World Federation of Investors, speaking from the shareholders angle, said the directive is not in the best interest of shareholders. Furthermore, Sasoni Wosu, the National Coordinator of Independent Shareholders Association of Nigeria, also said it is very wrong and not in favor of minority shareholders. He further said a rule is a rule and a law is a law. SEC rule cannot supersede the law, and concluded that it will support every arbitration against such move from SEC. On market news and update, the following AGMs are upcoming in the market. Air Service and Logistics PLC is expected to hold its AGM on the 2nd of July 2015. USC Properties on the 1st of September 2015, and Scamback PLC on the 8th of June 2015. On corporate actions, Air Services recommended 15 kobo dividend with closure date set for 15th of June 2015. USC Properties recommended 50 kobo with closure date set for 31st of August 2015. That's all we can take on this edition of the Nigerian Investor. Until I come again next week. Bye for now.